Thursday afternoon. Final hour for no market. Markets close day with Juneteenth, but we have a big day tomorrow. Over $6 trillion in nominal expirations for tomorrow, the 20th. And we also have a big end of month, big end of quarter expiration, and some levels going into not next week Monday, but the Monday after when we close out on June 30th. Seasonality wise, let's have a look. Typically, we see the market fairly bullish through July and then pulling back or sideways August, September. So let's go into some seasonality here. Okay. Let's have a look at some seasonality from the months. We'll do the S&P. Actually, let's do the Nasdaq and the S&P. Let's do a comparison. So typically you see here, once we get that pre-summer push started, which this year we had a pretty nasty correction from, top in February, March and April, starting to slide, bottom in April. April was a bit of a, chop zone, but also, the melt up started. May was mostly a melt up. June was pretty slow so far. I mean, we're halfway through the month. And so far, pretty slow, just eking out a couple more percent. But we're still year to date, like the S&P's up maybe between 1% and 2%. But we had a pretty big May. You can see here, the dotted line is this year. So 0.27 for April after being down double digits. May was a pretty spectacular month. I want to say May might have been one of the best performing Mays, I don't know, in the last like 30 years, 40 years, something like that. And June, 2.42 on average the last 10 years. We are up 1.27 for the month. So do we give some of it back? Do we stay around average? But you see here, July to August typically boast positive months. So if we have a pullback to maybe wrap up the month of June, I would think that the market is still capable of a melt up through July to August, maybe a correction in September, October. We'll see. Or we just stay the course, we push up through July, and then we top out August, September, October, get a pullback, and then maybe hope for a good Q4 to wrap us up by the end of the year. But perhaps it's enough of a melt up through June, July, and August that even a pullback towards the end of the year, or even a dip into August, September, October, is not really enough to take away negative or take us back down to negative territory for the year. So we shall see. But this is 10 years compared to this year. And so far, you can just do the numbers. What do we have for actual gains? So we were 1.95 in January, minus 2.32, minus 5.29, plus 0.27, plus 7, and plus 1.27. Okay. So from where we started, I mean, S&P's, like I said, up about 1 to 2%. Nasdaq's up about 2 to 3%. So this is Nasdaq with some summer seasonality. Here is the S&P. Similar seasonality. Okay, May, June, July, again, one of the best Mays. I don't know if it was the best May in Nasdaq, but it was one of the best Mays in the S&P. May, June, July, August. Again, seasonality trends the last 10 years, positive movements. Typically in August, September pullback. A lot of times that happens with tops and bottoms in the currency markets. We might have like a lull in the equities market, maybe a dip or a pullback. So even though I've been talking about this for weeks, like, I think we're going to get a pullback, maybe we don't. Maybe this market just at best goes sideways and the market just kind of melts up higher. But we're close. I mean, tomorrow's expirations could be interesting. Powell didn't really say anything that was super encouraging. The Fed is going to continue to pause. I know, right now the geopolitical concerns out there aren't helping. But we saw a little bit of a retracement in oil. Oil's up in the day, but basically gave back most of its gains. So talking about Iran, needing or wanting a deal. Let's take some headline news. Anything that stands out today? We got White House briefing. Trump will make the decision on whether to attack Iran in 2 weeks. Okay, that was at 1:34 today. Cool. Let's see here. Diplomacy still an option with Iran. There's some TikTok news today. Canada were in a series of countermeasures to help deal with Trump tariffs. All right. What else we have going on here? No date set between meeting with U.S. and Iran. Hmm. Yeah, I mean, it's just still going on. Stuff is happening. It's not that much fun. Hopefully, I don't know. Hopefully, it just resolves quickly. All right. What do we want to chat about? This morning, I took some notes. We did a little multi-strategy discussion. Directional bias, kind of ways to participate in the market. Doesn't really matter what asset class I trade. A little bit everything. Question came up, how do I choose my expirations? We talked about that. Strategy services, talked about those, just highlighted. Uh, Very different, daily trading, weekly trading, high reward to risk, major news events, a scanner that gives me the trades, protecting my portfolio, discretionary trading, and just some good, solid on-demand education. So that's enough to kind of hopefully be something for everybody. Whether you're new to trading, you've been here for a while, you're looking for a core strategy. I've got traders that are in my services that they do. That's it. Like they like the daily profit play so much. That's all they do. They like double up so much, waterfall income and double up. I mean, any of them. They like any of them enough that they're they're just following along. So, the consistency, it's like double up is more. I find a good trade through the week. Newsbreakers is I got to find a trade through the week. Pinch point's going to give me a list of stocks, and I'm happy to price out and trade. This week I looked through about 20 plus symbols and took one trade. I priced them all out. They didn't price out the way I wanted. Crash insurance. This is, I think, a really straightforward way to risk very little money to keep at least the drawdown under control. I mean, I would say one of the worst case scenarios would be the market's going to drop 40 to 50%. That's like worst case scenario. Obviously, it could be worst case scenario. I mean, Nasdaq was down, 70, 80% back in the dot-com bubble. So it's not that the market has to just be like, oh, it's down 50%, it's going to stop. It doesn't have to. But I certainly don't want to be on the hook fully invested when the market is going to decline, or it can decline 10, 15, 20%. So I don't think we're there. I just think it's nice to know that every quarter, every half a year, every full year, I have some, protection plans and insurance. It's cost effective, and maybe I sacrifice 1 to 2% of my bottom line in order to hopefully offset some of the pain that comes with really, really crazy markets. And that's my job. It's like job is risk management. Making profit is pretty easy. Don't lose a bunch of money. Don't blow up your account. Don't over leverage. Don't let anyone trade be the reason you can't trade. That's risk management. If you can control the, you can certainly see opportunities to make money. Okay. So if anybody has any questions on that, feel free to throw them in there. I'll answer them. Got some seasonality here in the markets. Sentiment wise, I'm curious. AAII did come out. This would have been printed yesterday. So we're back into a bit more of the norm. Actually, are we really? Nope. I mean, if this printed, when was this? Yeah, so this printed this week. 41.4. That's crazy that it's still that bearish. Gosh. I mean, and bears have just been wrong since the bottom in April. Yeah, 41.4 to 33.2. I mean, it's still tilted to the bears. That's crazy. I mean, clearly sentiment's been wrong. But that's also why it was a good contrarian indicator. This gave us the courage to start looking at positioning for April's bottom, and it came in a big way. And here we are, like literally 2 months later, and the market is 25 to 26% higher off the lows. So a lot of opportunity in that space if you were watching sentiment. Put call ratios, we're starting to see a lot more on the this is the put side. So starting to really be high in the put side. Is that the case? Are we really back up here with put call ratios? Gosh, I mean, again, a little bit of a contrarian play. Wow. I almost wonder if the market can just keep climbing this wall of sentiment worry. That's higher than we had back in, May of this year. That's higher than we had. I mean, it's almost the same levels we had back in April when there was so much fear in the market. That is kind of crazy. Bitcoin to gold, consumer confidence, retail sentiment. Let's look at S&P. Oh my gosh. And again, retail sentiment, look at the retail sentiment crowd, short on the S&P. Why? Yeah. Anyway, I did post that. It's just crazy. It's just so far off. The sentiment is so far off. I've done little thumbnails on extreme sentiment swings. This is all happening tomorrow. I think Goldman Sachs had like a 6.5 or 6.6 trillion dollar nominal value for the expirations tomorrow, with all things, not just indexes, but futures, and we had a volatility expiration this week. So, anywho, these are some levels that I posted in Telegram today. This should stick out with what's going on for tomorrow. Big resistance level here at 6,000 and some spotty levels, but noticeable levels at 5,900. So if price can stay in the middle of this, like that's a pretty good range for tomorrow. But if we get a directional move, we could have some breaks and some runs. So I mean, if we do break below 5,900, we could open up. There's not much down here. We could also go from 6,000 up to 6,050 and possibly higher. Taking a look here, a little bit more precise in the numbers: 5,920, 5,900 to the downside. A little bit around where we closed yesterday, 5,980, so around that 6,000 to 5,980 level. And if we break above that, 60.20 to 60.50. So, just watching some order flows. There's that probability cone in it, especially a zero DT environment like Friday. We'll see what that ultimately does. So keep an eye on it. All right. Any charts, any requests, anything else? We don't have to sit here for the full final hour if the market is clearly stalling. Currency strength today. Pound on top, Swiss is in second, euro and dollar. Dollar got a little bit of a bid this morning, was almost at the top of the food chain, has given back some since around 11:50 a.m. We have the CAD, the yen, Aussie, New Zealand pretty weak today. China's been down today, so we have some I wouldn't say risk off necessarily, but Australia, New Zealand not doing well, even with the dollar fading a little bit. I'm just going to do a spot check on my trading battle positions from this week. Let's go here. So I'm up around $1,000 in the trading battle. I mean, it's not bad to close. I mean, I think I'm going to get beat because my trade size was pretty small. I talked with Blake Morrow today, and he had like a 5 lot trade in gold that once he got activated, he was in. It's 501 leverage with an Aussie broker with 8 cap, and he was up like I don't know $10,000 or something like that. So he just leveraged the snot out of his account. But nevertheless, like very precise entry, and the market cooperated, so he had a huge win. I'm up $1,100. That's pretty good for a day. We took this trade yesterday, right around this time, 1:30 to 2:30. Up $1,000, respectable. I wouldn't mind maybe grabbing if I grab profit here on the Nasdaq. Let me check on this trade actually. So this is a trade that I'm in. There's still room to run. I mean, I guess I don't know if we get a big dump tomorrow, maybe I get lucky. So at the very least, I'm going to move this to at least break even. Let me lock in. I'm going to lock in $500 at least for profit. That not going to let me move it? There we go. So at least $500 profit. And then let's go to IWO, which is down $200. So this one, I mean, choppy tomorrow. Either, I mean, up profit potential. Let's see, what's the net? So 26 minus 2. I mean, I'd be up $2,400 on that trade. I would certainly be okay with that. I think I'm going to close these. I'll take the profit on these two. That's the majority of the profit. I'm still looking to see if I get lucky on a pairs trade for tomorrow for gold. This is gold, euro, gold, Aussie. Oil hasn't done much. Actually, you know what? I mean, this actually looks pretty good. Let's see. So I can take oil off for about $700. I can take the Nasdaq off for about $2,400. I think I'll go ahead and close these down. So I'll close this one down. Trading off hours. Ah, son of a biscuit. Okay. Off hours. All right. Well, I guess I'm not doing that. USO down 82. UK up 760. Let's see if I can take this one down. Off hours. Interesting. Okay. Well, let's go back to Nasdaq here. So the NDQ. If that stop loss remains activated, that'll be fine. I'll just keep that there. See, if we break this low, this trade is still running for profit. So if we get a break of lows, I don't know, maybe this jumps up to $3,000, $4,000, $5,000. We'll see. No, Ag. That was just an example. That was just an example discussing the strategies here, right? Like I was talking through the up, down, sideways. So the example I did on the 600 by 590 was when we talked about the downside. That was a bear put spread. I've already placed those trades. I'll show you them. I do have a hedge on. I went out to the end of the year. Here is a hedge on the QQQ. So QQQ, I posted this for my crash insurance masterclass, and I posted this in my Telegram. QQQ trade is here. What? Oh, sorry, I did SPY. This Q's I did. This account's new. So Q's, this is a hedge. I did a 425 by 340. It's a $4.89 debit that potentially pays $80. 85. Well, I guess it'd be max profit would be what? That would be, yeah, $85. So I paid 500 to potentially make 8,500. Net would be like $8,100. Now the odds of me getting a full profit of $8,100 is very slim. But look at this hedge right now. It is it's break even. I mean, it just started, but if we have a move of 3, 4, 5% to the downside, I've got enough distance away that it's going to change the options values. And because I'm out to December, I have plenty of time left in the trade. And if price cooperates, I'll have some, increase in deltas. The gamma will help. I've got time left in the trade. So I'll see an increase in extrinsic and intrinsic value. So I did put that hedge on. That's a 425 by 340 bear put spread on QQQ. And then I did some SPY trades for everybody else. I also did some futures hedging. So here's a SPY hedge. SPY hedge is a 525 by 480. That's 45 points. Cost me 985. So that's the most I can risk on the trade. This one's down. I also have some futures hedges in here. To December, I did a 4,000 by 3,100. 1925 was a debit. I'm not sure what that exactly translates to risk-wise. Probably about $500, and then a hedge here. So a lot of these with futures are hedges. I do have this long-term condor. This one's now up $150. Hey, I think I'm going to take some profit here. Let me see if I can close this one out. So the max profit here, this shows up about 50%. Max profit is about $300. I'm going to take profit if I can close it out here. Can I close this thing out for like a 305 debit? Let me see what the position. So I traded it for 610. So 305 would be about 50% winner. See if I can close this thing down for 305 or 310. 310 is a no. 315. 320. 325. Okay, not closing. All right, I'll cancel that. I'll just keep an eye on it. So it's showing some profit. I'll see if this improves. If we have a bit of a pullback towards like that 5,900 zone, then this will get a little bit better. I'm looking to close this one out probably around, days open. If I had this thing, I don't know, 20 to 30 days open and get about the halfway point, then I'll look to close it. Rest are all hedges. Okay, so Ag, you good on that? Like that was an example we just did for the multi-strategy discussion this morning. Okay. All right. What else? Talked about how I traded the battles yesterday. I'll be watching that closely to see if I can get some bigger wins out of the pairs trades. If anybody has a favorite asset, there's lots of ways to trade it. Do I have anybody that's trading prop accounts right now? Go ahead and type in like what you trade. You trade futures, you trade forex, you trade stocks and options, you trade indexes. Most people aren't just exclusive, but if I've got exclusive traders, I'm exclusive forex, I'm exclusive futures. I get it. I'm not. I trade a little bit of everything. So I was very, very concentrated in forex for a lot of years, and I became frustrated with some of the way the brokers would treat us traders, and my robots were getting disrupted. My swaps and positive negative swaps were a pain in the butt. The rollovers, the fees. I'm like, it just why? We have zero commissions in ETFs. You can trade an option for the same entry only, no commissions, no round turn. There's no spikes. There's no manipulation at the highs and lows. You just trade a strike price with time. So I gravitated a lot of my investing towards options the last like 4 or 5 years, and it's been like by far the best things that I've ever done. Just reason why is just better risk management. At the end of the day, it's better risk management. Better risk management allows me to make more money. I don't have to be more aggressive. I don't have to take more risk. I just manage my capital better, and profits are a little bit easier. So, any forex positions currently asking me? I'm still in some Swiss pairs, so I'm still just. And this has been like a multi-year position trade now. I've been in it for about 2 years. Um, let's go Aussie Swiss. So I'm still dollar cost averaging to Aussie Swiss pairs with a break even of around this like 58, or I'm sorry, about 5,400 break even. So I'm looking to see if we get back into the 200 moving average. I might consider taking some profit, but for me, the Swiss is if this is going to be some semblance of a bottom, whether it's a double bottom or a divergent low or a bear trap, or we just go low, high, higher, low, higher, high, I'm going to start looking to take some profit. Aussie Swiss up here taking some profit. CAD Swiss up here, 6,350 to 6,400. Hopefully, we take some profit. Again, do we come back and retest the load? We break the load to set up a bottoming pattern. Do we break this larger trend line? Maybe this is the better trade, right? Is that the better trade? Just wait for the trend line to break? Probably. As far as, just easy confirmation, let the bears, have their fun. Hopefully they stall here a little bit, but if that trend line breaks, we probably have better permission on a higher time frame with a price pattern to kind of signify a high probability bottom. Okay. With you, stocks, options, daily profit play, all good. Dabble a little bit in forex, very nice. Glenn says I trade everything except options. Is researching what are the methods are good generating some income. Glenn, I'm just gonna say it, dude. I wouldn't hate on options. If you're okay with a $27 course, I think one thing that might be helpful just to wet your beak a little bit would be this. It's $27 video series that I put together called Practical Options. And if you come out of this with like that just seems way too complicated, I'd be really surprised. I taught this like, I have like a 17-year-old nephew, a 19-year-old nephew. They've been talking to me for the last year about like wanting to start little accounts in college and having some money to invest and how they do it. And I'm getting them started in some basic stuff. Is if you've got money, it's like here's the allocation. You guys have time on your side. That's the best. That's the best thing for you. Just keep adding money when you can. Have time on your side. Like just participating at 18 years old is fantastic. Okay. But I also want to let them know, like, just know a little bit more about the market, know a little bit more about how you can protect your position. When you care about whether you've got, 5, 10, 20, $50,000 fluctuating in the markets, there's a few ways you can help protect that. So this is a very easy way to kind of teach options to anybody that's a little bit intimidated, doesn't want to dabble into them. I'm telling you, like I would love to have a debate with anybody that says like I'm never going to trade options. I don't know why. I mean, and this is from a trader that never traded options until like 2011, 2012, and that was basic options. Options have been way more vital to my survival and portfolio management the last like 5 or 6 years. So it's been a game changer. Yeah, the link is right here. I'll post the link. Thank you so much. I mean, and again, I just like the feedback, right? So here's the link. Okay, it's 27 bucks. Get the videos, check them out. There's a strategy guide to go with it. I walk you through it in this first video. And then just simple stuff. If you understand just the basic vocabulary, which I know is really silly, that's the one dumb thing about options is it comes with like a vocabulary learning curve, and whether you're Greeks and things like that. But I call it practical because all you really need to understand is what are you doing with the underlying price. So if I'm trading the SPY, or I'm trading the Qs, or I'm trading stock like Apple, whatever it is, the underlying price, where does price have to be for me to make money? Where does price have to be for me to have on risk? What's the trade going to be, plus or minus? What's my risk? What's my reward? And how long do I have to be right? I mean, these trades are very, very simple. All these trades are simple. Okay. So this is like a lot of detail packed into 4 videos. I mean, you can see the length here. It's like little intro and strategy guide walkthrough, but 30, 40, and 33 minutes. But give me the feedback. And if you like it, I do have a course that goes with this. It's a practical options, full course. It's $497, but that $497 is a bonus course to anybody that joins my services. If you're in my services here, okay, if you're in my services here and you upgrade to any of these for a lifetime membership, I'll give you that $497 course. Okay. And it's already in the classroom. So if you get it and you upgrade to lifetime, you'll see that there is my practical options full video series, which is probably too much education. You're still beginning. Like it's 13 option strategies. It's a lot, but if I can at least like I said, wet your beak, get you excited, get you to understand the basics, know how to just put on the pros and cons of your trade. If price is above this, do I make money? If price is below this, do I make money or lose money? Just knowing what the trade is from start to finish, and then knowing that if the market went to infinity, if the market went to zero, guess what? You're only going to lose what you initially risked, right? Yep. Okay. Yep. And it's on my Discord too, but there's a link. So you get the vimeo.com/on-demand. Yeah, that's it. Awesome. Thank you, Glenn. That's great. And again, join me for these sessions. Hit me up in Discord. Let me know, what you think. You get through the videos. It's, about an hour and a half, 2 hours of your time. Give me some feedback, especially if you just never really thought about options. I'm curious to know, like, does it make you a little bit more interested? Understanding like a basic call spread, a basic put spread. I know that language sounds silly, but it's such an easy trade. It's such an easy trade. And there are like professional traders that do it because it's their job. It's just a nice trade to have. It's risk defined. Price can do what price does. It's time versus price. There's no crazy amounts of manipulation at highs and lows. There's no sweeps. There's no hunts, right? It's just time and price. That's why I love it. Okay. So yeah, Glenn, give me some feedback. And then for that matter, if you have my practical options, I'd like the feedback. Okay. That's why I did it. I mean, I did it with like my nephews in mind that know nothing about the markets, but I know between, let's say a 16-year-old and a 9-year-old, that's probably the crowd that I'm teaching. I know I've got members of my services that are all shapes and sizes, all age brackets, and all tech savvy and not tech savvy. I get it. So it's just basic understanding, and if we get comfortable with what an option trade is and get comfortable with how to place it, then we start navigating into a broker platform, which again, you see me use this broker platform every single day. Tasty does live demos on their desktop. They do live demos on their web platform. They're great with education. If you need anything, their support team is fantastic. So this to me, I've used E-Trade, Fidelity, Schwab.com, Thinkorswim Web, Thinkorswim desktop. I've used Robinhood. I've used Webull. I've used Tradeer. I've used Tasty Trade here, as you can see. I've used their web and their desktop. I've used Interactive Brokers. All of these are roughly the same. The only two that I've actually had to have a learning curve with that didn't feel intuitive. I couldn't navigate on my own. The only two that were a little bit more difficult to handle at first with going through education and making sure I can, organize my charts and organize my portfolio and my symbols and my trades and finding my order tickets and things like that. Thinkorswim and Interactive Brokers. Those are the two brokers that I had use their platform that a little bit of an educational session, like go into their portals, like their broker platforms have educational videos. Spend 30 to 60 minutes catching up on how to do this and how to do this in a couple. I mean, you're fine. But those are the only two I've had a learning curve with. So for the most part, they're pretty intuitive. It's just understanding. Okay, so for an option trade, what do we have to consider? Let's talk. And this is totally hypothetical. Like, this isn't a trade or anything like that. This isn't financial advice. But if I thought that the Nasdaq, okay, there's two ways I could play the Nasdaq. Okay, I just want, like, let's have some fun with this. Let's go Nasdaq. Let's go QQQ. And if I want to do this, like, just simply, I could go. We go XS. Maybe XSP would be good. So it's a little bit cheaper to trade XSP, but it's also cash settled, so you can trade this a lot like. Well, it's basically an index option. It's just a mini version. So let's say that I believe that the XSP is going to go up to around 630 this year. Okay. I'm going to see if I can put in a trade going both directions on XSP and see if I win one or lose one. Do I walk away with net profit? Okay. So let's build this out together. So my goal is to see if our destination at the end of this year is going to be 60-25 or 60-30. I'm going to look at a trade on XSP. I'm going to buy the 625 call. I'm going to sell the 630 or the 635 call. Okay. And I'm going to see what that debit cost me. So I'm going to put that trade in as a price. Let's see what it is. So if I go XSP, let's say we're like, you know what? Let's go out to the end of the year. By the end of the year, can we be at a high? Are we going to finish at a high for November, December? Maybe. Usually December, January, give us some flows. If I went to the call side, I buy the 620. I don't have a feed right now. That's freaking annoying. I might have to do this tomorrow during live market. But a 620 by 630. I hope this option chain will fill in. Let me see if I can find this in. Let me go to another platform here. I'm going to go Thinkorswim. Let me log into my Thinkorswim and see if I can get an order. Give me 1 second here to log in. Okay, so I'm going to see if the option chain actually fills in. So this one is there. Let's go trade actually go XSP, and let's go option chain. Go out to the end of the year, so December 31st. I'm going to bring in some more strikes. I'm wondering if I don't get any, fudge, I don't get any feeds here. All right, well, this will be a little idea for tomorrow then. But what I'm going to look at is this. I'm just going to consider going out of the money. And if I were to say the trade can go from like 620, okay, 620 to 630. Let me box this in. So it might be a little bit easier to visualize this. So if I box this trade in, so from 620 to 630, okay, and if I give myself whatever asymmetry I'm comfortable with, if I was willing to risk about $500 to $1,000 in order to make $2,000 or $3,000 or more, I would say I could win one, lose one, still net profit as long as we have, one of these trades work. Now, obviously, there's still risk in the middle. If I did this on the call side and I do a similar trade on the put side, guess what? If price stays in the middle, I potentially lose both trades. Okay. Maddie says Thinkorswim. So is your Thinkorswim, are you on the application, like the desktop? Yeah, I'm still not getting a feed here for Tasty. I can go into the web. Or is it the desktop version? Like the application? I'll go into that and see if we get an option chain. So let's take, where'd it go? This one. So I don't have any feeds here, so I'll close that down. I'll open up Thinkorswim and see if I can get some option chains. Okay, where's this? Come on, Thinkorswim. Oh, there it is. Installing updates naturally. All right, I'll just give the outline of the trade. So I'm going to look at something like this to the call side. I'll look at something like this to the put side. Put side might be a little bit more, a little bit more asymmetric. Is something like this. Okay. So if I did like a call side here, and by the way, this isn't that far out of the money. This would be like up, maybe 4 to 6%. I do wonder what the debit is if I did a bull call spread there. And then on the flip side, if I take this down to something like a 5, let's say like a 520 to, let's go 520 here, put to a 480 or so. Okay. So the plan would be this. If we get to these highs, we make money. If we get to these lows, we make money. If I were to lose one trade, win one trade, can I net profit and give this market an opportunity just to go up or go down? I don't really care what direction it wants to go, knowing that my risk is in the middle. Like there's risk here. So that's why I want to make this trade like very, very cheap. So if it's risk in here, that's a big dead zone. But it still gives me a chance, instead of just hedging my account, which might be, my hedge might be worthless, at least I can get something to the upside. Okay. So we'll see. But I'll price this out tomorrow. Let me see if I can log into, there we go, Thinkorswim. I'll get into the desktop application. Your web version, really? All right, it wasn't working for me. I wonder if did the futures market just close early or something? Maybe it did. Anyway, I'll see if I can get something for XSP, or I can go SPY. Maybe get something on the SPY. So SPY, let's go end of the year, December 18th, 2026. Let's go end of the year here. Now we get option chain on SPY. Okay, so if I do like the 620 by 60 or 630, so I pay $5 to make 10. It's not that great. If I want to pay here, I pay $247 to make 5. I pay $470 to make 10. Man, that's really not that great. I thought the call side could be a little bit more lucrative. This would be a little bit better. Basically, if I'm willing to say I'm going to risk $1,000, $1,000 risk to make about 1470. But I want to show you how cheap it is on the put side because they're so much further away. If I went down to the put side, I did the 520, buy the 520, sell the 480. For $4, I can make up to $3,600. So clearly, the reward to risk, to me, like the asymmetry is, way more opportunity if I'm going to get a giant sell-off, right? I mean, I can risk 400 to make 3,600. That's like a 9 to 1. The odds of this thing going all the way 9 to 1 are pretty slim, because price would have to be below 480 by expiration. That's the end of the year. We'd have to have a terrible event for that to happen. But if we drop 3, 4, 5% in these next, 60 to 90 days, this 394 could be trading for $500 of profit, maybe $1,000 of profit. I could take home 20, 30, 40% of this max profit, right? Which would give me some asymmetry. So I don't think the call side is that great unless I'm willing to say, you know what, let's go out to, let's go trade here. Let's go XSP. See if I can get an option chain in XSP. It's going to be similar, but I would say that the call side's probably going to be more expensive. End of the year. It's all NA on my platform. All right. So SPY's working. I just don't have the XSP for whatever reason. Okay. What I was going to say is if I went out to, let's go crazy. Let's go out to 2027. Okay. Let's give this market, look, I don't know what's going to happen this year. Nobody does. Let's go out to 2026, not 2027. December of 2026. Okay. If all I did here was said, you know what, I think that the S&P can get to 700. Let's buy 700. Okay. And let's see how cheap it is. So I can risk 147 to make 3. I can risk 280 to make 700, almost $700. I can risk 400 to make 1,000. I can risk 526 to make 14. I can risk, if I said I'm going to risk $1,000, Okay, so I can risk about $1,000 here to make 3,500. That's fair. Okay, we don't have to get there. It's like we're going out a whole year for this trade. But if I'm willing to say, look, for $1,000, I can make them up to $3,500. I'd be okay with that trade. At the same time, if I did the hedge, if I hedged the 500 down to 450, how wide is this one? I went 45 wide the call side, so let's go 45 wide here. I can risk 1584. That's max risk on the whole debit to make $3,000. Let's see if I can go a little bit further. So put side, $50, $45. Maybe put side to give myself a little bit more profit potential. Now it just makes it more expensive. Maybe that's a decent jump, about $1,600 risk, max risk for 33.62. I don't know. It's just a thought. Do I like the trade? No, not really. I like the cheap hedge side better than anything. I just think right now, like the call premium is just a little up there. So, I mean, for me on a call side, I'd rather buy a call if we're down here and then take the call spread where we have to get there and it's a lot further away. Like right now, this is only, maybe 4 or 5% higher. If it was down here, we'd be talking double digits higher. So it's way further out of the money, which means it's way cheaper. Okay. And obviously, if I had this trade, pulling back, my neutral trade that I put in earlier, that was an iron condor that I did from a Project Options Edge. That trade's going to be nice and profitable. If I were to position for, look, we can go down here, we can go up here. Maybe that trade that I'm talking about right now is a lot cheaper. Okay. Which I'm okay with. So I'd be willing for this. If I could pay like $1,000 max risk to make somewhere between, let's say, 4 to 5K. I think that's a pretty good trade for trading the S&P either direction. Go out 12 months. The goal is the most you can risk is $1,000. So if that trade is offering me $1,500 profit out of a max $4,000 to $5,000, or offering me $2,000, I'm at like a 30-40% take profit. That's fine. I don't have to wait all the way for 12 months to get this thing into full profit. But if we had a big move one way or the other, that'd be a pretty fun trade to not really have to pick a direction. But it's defined risk. Okay. I do have risk, like the dead zone would be here. So it's not a guarantee, but I think price is going to try to do something to the effect of finding this low or breaking all-time highs with a melt up. And I mean, honestly, we might be pleasantly surprised to the upside. Okay. Make sense? Could you show what trades have been generated by the pinch scanner this week? Yep. Jazz was the only one that I took, Lee. Here's my tracker. The only trade that I'm in was Jazz. That was on 6/16. Before that, we took Dell and Nike. These are the two trades. So Jazz was this week. Dell, Nike. Nike has two trades. One's a ratio spread. One's a credit spread. Schwab, Rocket, ULS, SEIC. Those did not get filled. Not yet. So we're in, of the 28 we've taken, 5 of them have already been closed out. So we've got 22, 23 trades running right now. What else here? No web XSP just for that one December. Okay, gotcha. Let's see. Yesterday explained to us the swing trading AB equals CD. I found an entry for gold 4-hour time frame, open long. Please correct me if I'm wrong. I'd love to learn. Let's take a look at gold. Okay, so gold on a 4-hour time frame. So what are you looking at here? Are you staying with this uptrend? I found an entry for gold at a 4-hour time frame, open long position at 33.50. Okay, so 33.50 was right here. I'm assuming that you're doing something along these lines. Tell me if I'm wrong. Are you doing low, high, higher low, higher high? Type in a wire. Yes, that's correct. So low to high, higher low to higher high. There's your ABCD. I would think that's the low you're starting at. If you're going at a buy, you're opening a long position. That's a great entry. Okay. And what you are trading is a sub swing. Okay. You are in a sub swing because this low to high would be the symmetry that I'm actually looking for. That low to high. Because look, this is what I mean. This thing went up to a 5th wave completion and we went A, B, C, D. That is symmetry. From here, A, B, C to D, I think this gets back to the highs. You're just looking at the same type of thing. Symmetry, symmetry. So it's like little symmetry inside a bigger symmetry. I think that's what I'd look at. So as long as this moving average holds, if this moving average holds, then this trade is totally valid. We're making higher lows right now. So if you're entering here looking for the swing to the upside, then sure, measure that symmetry, measure that symmetry. We've got to be getting close back to these highs again, in my opinion. But I think from that high, I wouldn't be surprised to see gold come back in range. Come back to the bottoms, 3160, 3100, maybe get a little bit sneaky around the 3000 handle. But if we're going to go up, 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 up and consolidate at these tops, that to me doesn't look like a bearish formation in gold at all. I think this is just consolidation for the market to go higher. Okay, does that make sense? That's what I see on gold. Hope that helps. Okay. Does that help? Yeah, good. Okay, thanks, Ken. Alrighty. Yeah, so we can put a pin in this. I'll come back and I'll assess. I just want to price those out. Maybe a crazy move for 2026. But ideally, I mean, if this is offered, we'll see. We'll see. I mean, I was going to say I don't know if the market's going to be, for 2025, the end of the year. I mean, are we going to continue this melt up, or is this market officially trying to break in like a rising wedge fashion? Maybe it is. Connect the levels here. We're just kind of rolling over on the right hand side of this wedge. So to me, that's a bit of technical confirmation. Okay, but that's why I went into this week's trade and I said we've got to break this low right here, which was last Friday's low. If we take out that low, then sure, we're on the right side of this wedge. The market could pull back. This area seems very doable. Just come back in and fill some gaps. That's it. Maybe it's 4 to 6%. Doesn't have to be anything crazy. Doesn't have to be the sky is falling. This little correction would be somewhere around 4.6 to maybe 6%. Okay. I mean, that's a good looking pullback. From there, it'd be nice to see the market positioning for higher highs. Okay. So I'd like to see how it works. I mean, honestly, I'd be considered like going here. Could I do something out of the money for a win to the upside? Also go out of the money here for the put side. Like that's the exact trade I talked about. It's just, do we get there? I don't think price is just going to stay here, and if we are in the middle, are we able to sell something high enough, sell something low enough to still generate, maybe a neutral trade? That's also something we can discuss. So, anywho. All right. Any other thoughts, questions, concerns? Little summary from today. So this morning session that I did around 9 a.m. Eastern time, I have it in my video series. It's under like Trading 101. It's under my live sessions, bonus education. But we discussed these notes right here. So if you want to go back and review that, feel free. Had a little bit of follow up on that today. But like I said, services I'm running, ways to get started, something for everybody. I've traded a lot of markets. I trade FOREX still. I trade futures. I trade options on everything, stocks and ETFs, indexes, right? So I invest in crypto. I mean, I trade IBIT. I buy Bitcoin. But it's basically core position and defense, core position and hedging, just in case, protect the downside, but let there be some upside runs. Gold, let there be some protection, upside runs. Let there be some upside protection runs on, or downside protection runs on silver. So I do want to protect the downside. This has been a really crazy market where what the narrative is trying to make us believe right now is that so many things are about to go wrong in the US, right? And bears have been so dominant in the news cycle to make everyone worried, to make everyone fearful. But look at what the markets have done. I mean, yes, the market was down 20% peak to trough. It was ugly, it was nasty, but it pivoted and it pivoted hard. And I think that I mean, unless we see like a real threat to the labor market, unless we see like a real mess up with the global trade situation, I just earnings are fine. Earnings are fine. There's no major compression. If tariffs aren't out of hand, companies can absorb it. If tariffs get worse or inflation gets worse, I really think that the Fed's main objective in 2025 is to not let inflation get worse. If it gets worse, and it's, by worse I mean probably greater than 4%. I think we can operate within about a 2 to 3% inflation landscape. But if we get over 4% or 5%, again, that's really bad. That would be giving back about 2 years of sideways inflation. We'd be going higher again. It wouldn't be good. Like that is enough to have this real conversation of, look, the voting base is going to be insanely like angry. Trump can point the blame however he wants to, but bottom line, he's the president. It's under his administration. How are we getting higher inflation? The Fed is trying to battle inflation. I think if they cut, it would be a mistake. If they cut aggressively, it'd be a mistake. What the lesson's going to be learned by the bond market. If the bond yields go up while the Fed is cutting rates in 2024 or 2025, that's the bond market telling us that we're getting it wrong. And it's just a matter of time. So anyway, lots to navigate, lots of uncertainty. That's why I like to be nimble and I like to be flexible on my strategies, and I like to make sure that everything that I do is risk defined. And any type of crazy black swan event, any type of outlier event, I just go with the flow, because it shouldn't cost me any more than I was originally taking on the trade. All right, daily 20 bounce has been nice. What trade there, Todd? Are you talking gold? Yeah, if you're looking at gold, I'm assuming you're talking gold. Daily 20. Yeah, I've got a 21 period on my chart, and it's been riding up this thing really nicely. So we came back and hit it. That was the 50 actually. So we had the 50 to the 21 to the 21 to the 21. So yeah, I could see that low holding. Even if you want to get more aggressive on a stop loss like that, that kind of be your stop loss area. But if we're continuing to carve out some higher highs, probably a good thing. Okay, nicely. Yeah, pinch point scanner, love it. I'll take a look at it tomorrow with live markets and see if we got any new ones. We had like another 23 stocks this week. I priced out all of them, and Jazz is the one trade that I took. We had some of those as repeats from last week. So, I mean, we had 2.5 weeks of live classes, master classes, running through the process start to finish, find the scanner, find the trade, price it out. I mean, I did that for 2.5 weeks. Everyone's very comfortable with the process. You got tons of education to watch and review. So now it's just spot check the scanner and see if we get a good trade. Good stuff. Yes, until today. Oh, yes. Yeah. Got it. Okay. So market-wise, I mean, futures down 0.93 on ES. NQ was down 1.1. So we do have the futures market that's down. Let me bring up this futures feed here. So if I go Chris Pulver trading right here. Okay. I was watching to see. So this would have been Thursday the 12th. So Thursday's low in futures. If that gets taken out tomorrow, look out ahead if we're taking out these previous lows. Because notice on the futures market, we have not broken any of this structure yet. We have a low, we have a low, we have a low. If this is going to be breaking, I mean, it's close. Tomorrow's a new day, but it's close. If this does flush a little bit lower, there's certainly some more downside that we could have. It's been a while. This melt up's been pretty impressive, but I see a lot of overbought conditions with some divergence, which just means a little bit of a correction. That's it. It doesn't have to be a bear market. Doesn't have to be, oh my gosh, we should have hedged like crazy and sold our whole positions and get out of the... I don't think this is necessarily a bull market or a bear market rally. I think that this is a reflexive move in a hard pivot that's just showing some acknowledgement of the top. Like the highs are not that far away. The all-time highs are not that far away. So let's see if we can get a bit of a pullback or correction, and then we can get back to those all-time highs. Okay. but time will tell. So tomorrow's big. We have a huge expiration tomorrow, over $6 trillion in nominal. And it's like 3.7 in the SPX alone. That's in the morning. We had a VIX expiration this week. We still have end of month and a quarter on the 30th. So there's still some, potential shakeups and drama in June, despite being a summer month and usually like pretty slow and steady. But maybe it gets a little bit more exciting because we are kind of rolling over a little bit. So I just want to be mindful of that. Okay. So that's what we watch for tomorrow. Let's see if there's any drama. This has not been like a super exciting, volatile week. This is the high from Monday, and this is the low from yesterday. So Friday being the day that it is, end of week, do we get more chop? Do we go down? And I'll wrap this up all with this final bit, which was I sent this out in Telegram, but these are some key levels. Okay, key level at 6,000 on the SPX, and down here at 5,900. So if we're in between there, price could stay in between there all day, maybe. Okay. On the other side here with some more flows, maybe between like the 59.90 to 60.20 zone on the upside for maybe some ceilings, and maybe the 59.20 to 5,900 floor. Again, price can stay in the middle all day. But if it starts to threaten these sides, either we run to them, bounce off them, run to them, bounce off them, or if it's a liquidity hunt, we might go through them before we're seeing some hedging. Thoughts on oil? I don't know. It's oil. It's right now. All I did on oil, I took a trade on CL. I did this for my Project Options Edge. I have a 1-1-1-1 trade, which is like this. I have a bear trap right here, and then I have a wider credit spread. So the trade would give me about $220 profit if I win. I'm risking about $1,500, but max profit could be upwards of $750. And we'd have to go less than $50, by the way. So we'd have to have fresh lows on oil at $50 for me to take on any real risk. So if we just stay up here and we stay elevated, then I think this trade is going to be profitable. This trade is only out 45 days, so we'd have to have like a severe dip in oil, which I don't know if we're going to. So I don't know if oil is going to keep going higher. I think there's too much at stake if oil goes higher. So I think there's going to be a lot of jawboning. I think there's going to be a lot of try to suppress oil prices going higher, I think. Because obviously this can break the lid off inflation in a big way. Like, oh my gosh, pay at the pump. We're going from a 319 national average to 345 or 355 or 365. You'll notice a big jump in prices if we jump from, let's say $75 to $95 oil. That rate of change would be pretty severe. So I'm just trying to position out of the way. So if it stays up here and hovers on the daily above the 200 moving average, maybe it's the start of a bullish trade, but I don't think it is. I think oil is going to be supply and demand base and range bound. It's just a matter of establishing those comfortable ranges. So, okay, I'll let you go. Happy Thursday. We'll come back and do it again tomorrow. Live session tomorrow for daily profit play. Let's go have a good way to close out the week. All right, thanks everybody. Thanks for being here. Bye-bye.